Yesterday, the euro reached the new yearly low near the parity level, and pressure on the pair increased when Germany's macro data came disappointing. The ISM Services PMI edged higher to 56.9 in August, beating market forecasts and pointing to the strongest growth in services activity in the United States. In this light, the greenback strengthened against the euro. The pair hit the yearly low and is now trading below 1.9900. The ECB's monetary policy meeting is due tomorrow. The regulator is expected to announce a 0.75% rate hike. This could provide brief support for the euro. Therefore, be careful with sell trades at yearly lows because a reversal could occur to the upside in the short term. Today's macroeconomic calendar contains such releases as Germany's GDP for the third quarter, which is projected to rise in line with the market forecast, and the Eurozone GDP for the second quarter. The euro area economy is estimated to expand by 3.9%. The slower the growth, the greater the pressure on the euro. The market will also focus on Governor Andrew Bailey's speech and the Bank of England's MPC Treasury Committee hearings. Policymakers are likely to discuss further rate hikes and support for UK households during the winter season. The government is now trying to find a way out of the energy crisis and mulling over financial help. It remains to be seen whether the pound comes under pressure and tumbles against the greenback, or pressure on the currency eases. However, given the current state of the economy, the pound is unlikely to rebound and reverse to the upside in the short term. From a technical point of view, the euro-dollar pair hit the yearly low on the 1-hour chart. The price is now hovering around 1.9880 support. Resistance is seen at around 1.9915. We may see a false breakout through a 1.9915 after the release of Germany's GDP results. Should the data come in line with the market forecast or worse than expected, a false breakout through 1.9915 would give a nice entry point. Meanwhile, should the price break through 1.9880, consolidate and test the mark from bottom to top, an additional sell signal would be generated with targets at 1.9849 and 1.9819. Long positions on a rebound could be considered at 1.9819, allowing a correction of 25 to 30 pips. Long positions at 1.9849 and 1.9880 could be opened after a false breakout only, with the target at around 1.9915. Should the price test with this mark from top to bottom, a buy signal would be made, with targets at 1.9949 and 1.9986. Short positions could be considered at 1.9986, allowing a correction of 20 to 25 pips, while shorts at 1.9949 could be opened after a false breakout. As for the pound sterling, the currency almost hit its September lows. A breakout through 1.1453 with a retest could create a sell signal with targets at 1.1408 and 1.1358. Still, a retest might not take place. Anyway, the focus is on 1.1408 and 1.1358, where long positions could be considered on a rebound, allowing a correction of 35 to 40 pips. Meanwhile, a false breakout through 1.1408, which is the yearly low of 2020, and 1.1453 would generate a buy signal, with a target at 1.1500. In case of a breakout and a retest of the mark from top to bottom, a buy signal would be made and the price could retrace up to 1.1559 and 1.1607. Shorts at 1.1607 could be opened on a bounce, while shorts at 1.1559 and 1.1509 could be considered after a false breakout.